Hello guys and welcome back to the channel. So in this video we're going to do a recap of the Palantir Q4 earnings call and see if we have missed anything, see if there are any gems in there, and if we're going to come to the same conclusion as Cathie Wood, which is to dump all shares, or if we're going to want to go all in. If you like this channel, make sure you hit the subscribe button. I am currently in the process of evaluating if I should go all in on Palantir on one part of my portfolio. I'm basically 99% decided. I'm in the confirmation bias mode, so I just research and try to confirm if it's a good decision or not, but I'm 99% decided, and I want to take you guys on this journey. So there's going to be a lot of Palantir content on this channel, so make sure you hit that subscribe button. I also don't want to take up your time, so to be honest, there is a couple of hidden gems in the earnings call, which is why I think that you should see this video as a Palantir investor. For example, he answers one of the main reasons people think that Cathie sold Palantir is because the government revenue was slowing, and I feel that this gets addressed in the earnings call actually. There's many questions about the company's future. There is very good statistics for you as a Palantir investor, but I don't want to keep you hostage. I don't come to the same conclusion as Cathie. I've seen this 2 times now, and I get more bullish the more I see it. And yeah, so I don't know what the heck with her. Maybe it's a subject for another video. But let's get into the earnings call.
Churn it, and then you say you've churned the data and you move on, but actually operationally determinative for your business. What you see here is cohort analysis. This is and what you see is from inception of Foundry, the decline of older software products and just the massive exponential growth. Obviously, it's rough math, it's 100% growth year on year. And then starting last year, not off of a small integral, which is obviously very important because, you know, small numbers can grow quickly even if the software is not strong. Big numbers don't grow quickly if the software doesn't exist, especially given that our sales force is super nascent. We're building it quickly, but we only have 25 fully accredited software. Fully accredited meaning they've been here for 9 months or more. And what you see here, obviously the CAGR here is just unbelievable.
Okay, so this is insane. A little bit about me. I'm a Swedish real estate developer. I'm part of making hundreds of apartments in southern Sweden. And I decided to diversify more into the stock market, but I dabbled a little bit into a subscription business. And so I know a little bit about, I mean, I know Palantir is not a subscription business, but it is like a subscription business. And the numbers that you see here is insane. And I want to break it a bit more down to you so that it's easier to see. So you have every year, this is 2018, 19, 20, 21. And then you have the cohort of 2017. A cohort is when you group customers together so that you can view them statistically as a group to make conclusions from. So the people who have bought in 2017, they bought for 32 million in 2018, and in 2019 they bought for 19 million, and then in 2020 they bought for 9 million, and then in 2021 they bought for 11 million. This is pretty average. So this is how a subscription company is, or, you know, this is quite normal for companies that, you know, you get customers and then you slowly lose their business. And then, you know, there's a customer lifetime value, which is also money-wise and time-wise, it's normally a finite amount, right? But look at this one. In 2018, the people bought for 7 million. And then the next year, the same cohort bought for 10 million. Which is a 30% increase, and then the year after, the same people bought for 15 million, which is a 50% increase on the 30% increase, and then they bought for 17 million the year after. And then you can see again that the 2019 people who bought for 19 million, then they went on to buy for 69 million, and then they went on to buy for 102 million. And again, you can see here, the 2021, they bought for 6 million, then they increased it for 18 million, so 3x, and then the new guys bought for 53 million, and I mean, we have to see in the next year's report if they end up for buying again for, yeah, more or less than this money. but this is crazy good. So what this means is basically they have a negative churn rate, meaning that they are expanding the business even if they're not selling to anyone. And this is an insanely bullish sign, and this means that the customers are super happy with their products and their product is working. You don't need to look at anything else. Now let's look at the next clip.
A very similar phenomenon where you see the inception of a foundry into the USG. There's a lot here. There's a lot of qualitative stuff here that we can't explain, but one of the qualitative things that you kind of can get a sense of is Palantir, the newer foundry version, not only grows dramatically with this is like 65% growth just without looking at it more precisely, but it's over 200% CAGR here, which is also like Phoenix rises kind of thing. But what's qualitatively particularly important and very protective is this graphs pretty neatly onto what are the programs that are going to grow tomorrow.
Okay, so again here you can see the same thing. 2018, 169 million. Then the same customers bought for 210 million. Then the same customers for 230 million. And the same customer for 237. So the customers are growing as the time passes, right? And then you can see that this is not an outlier, because in 2019 they had 37 million. And so look, then the business that they did in 2018, like the new customers in 2018, they bought for 37 million. So they 37x'd. And then they again have 1 million from new customers in 2019. And that became 3 million, so 3x'd, and new business for 65. And that became 175. What is this here? It became 37, 176. Oh my god, these numbers are insanely good. And this is what freaked Miss Cathie Wood out, that they only had 7 million new in government contracts. And also what makes this even more insane is that he's saying that they don't have like for a majority of their history they didn't have sales guys, and now they only have 25 certified sales guys that did all this. So it's this is a very, very bullish sign from the product viewpoint, that there is very good retention on the product. The customers must be enjoying the product, and they're paying more even though there is no salespeople bugging them to buy more. Crazy good.
Very, very strong. Like in the 150 range. We have Glazer here. He'll pipe in with but it's roughly in that range. But what we do not have, you could look at it as a negative. It's like we basically are doing this with a very, very nascent, honestly, numbers.
So I just want to show this because he again talks about not having salespeople, and like I think this is very important, because the only other company that I know that doesn't do any sales or does very little sales is Tesla with Elon Musk. And I mean, Elon Musk is their marketing machine, so you can't say that they're not doing any marketing, but still, it really speaks for the product.
That you financial people like, how much is it growing? What I would call actually organically, what I guess you guys call net dollar retention. Very, very strong. Like in the 150 range. We have Glazer here. He'll pipe in with but it's roughly in that range. But what we do not have, you could look at it as a negative. It's like we basically are doing this with a very, very nascent, honestly, if I were not on TV, I would say bonkers small sales force. And so like that means two things. What does it mean on the positive side? It means that net dollar retention number is awesome, because my understanding of how this happens at other companies is like 8 people running around begging the person to expand their deployment. That's not happening at Palantir. The salesperson there is the foundry product by and large. So obviously that means we think we can get lift from hiring salespeople. We're doing that aggressively. I think we have about 150 salespeople now. We're in the market to hire aggressively across Palantir.
So you see they're hiring aggressively, and this is fantastic. I mean, because all they need to do is get customers to start, and then the customers will move on this chart. Like each year they are going to increase the sales. So it's very, very good for the company. So now I believe the next clip is going to address if there is a slowdown in the government, which completely freaked Cathie Wood out. Maybe she should have watched this video.
To work, you could expect even higher growth than what we have, although I'm very happy with it. Was like we've doubled USG, US commercial now,
USG is U.S.
from 50
government.
to 100, 100, 200. I believe we will double it again this year. So, in any case, some of this is unknown, but we are working very aggressively. The other thing I would say outside of the U.S., again, a slightly longer answer, but one of the ways people look at Palantir is, if you're going to, I think a financial analyst likes to, what we would call in science, normalize the data. What you in finance would probably call strip out the inorganic inputs. But if you're stripping out the inorganic inputs, you also have to look at what I would essentially view as an inorganic input of COVID in Europe. If you strip, and so Europe has been slow for us last year, which is one of the reasons why we were only at 41% last year, and growth would be even higher. Europe grew, if you include SPACs, at 9%, so slightly above what's probably inflation. But there, we're taking the opportunity, believing there'll be a handoff from USG to USCom to Europe to rebuild with some very, very strong salespeople who've come from the best companies, believing that that's an environment where we can really do that. So, there's two ways to look at this. Just on that angle, you could say, well, what could you do to gas charge America? We're working on that, and very, very aggressively, and most of our sales hires today are focused on that. But there's another more long-term thing. If we're right that the world wants Silicon Valley the way it was, meaning a handoff from government to commercial to the rest, commercial U.S. to the rest of the world, and with each one with a lag, America to Europe 18 months, the rest of this company only has to grow everything besides Europe, commercial 38% to get 30% growth in aggregate. So getting Europe to track better, both from a handoff of what happens in America to Europe and with more conventional sales approach is kind of what we're looking at getting done this year and see the fruits of it next year.
Okay, I'll buy this. So basically he's saying that they had a slowdown in Europe because, they don't have the sales force in place and COVID really has hurt. And I'll buy this. I'll give him the benefit of the doubt, even though this you can only see in the next video. So now let's look at the next clip.
And just a quick follow-up on the government. I know you had a tough comp. It did decelerate pretty materially in Q1 in terms of the growth. Can you give us your perspective on what's happening on the government side?
This is what freaked Cathie out.
Well, there's a couple things that are happening there. So if you were looking at this more like from a scientific perspective, you had a time series that's 15 years. First thing you would do is say, okay, what's happening in that time series over the 15 years? What you see in U.S. Gov is a compounded growth of 30%, but like this, which is, the positive of U.S. Gov is it's reliable, the sums are big, the quality of the revenue is very high.
So if it has always been like this, then is it okay for a long-term investor to invest that it's going to accelerate 30% quarter to quarter every quarter? No. So I again give him the benefit of the doubt on this.
There are a number of problems, but biggest problem is barrier to entry, which we've clearly solved, and then re-barriers to entry, which we've solved.
These are their modes.
Or are solving, but that's going very well. And then the second one is lumpiness. Now that lumpiness still exists, and actually in some ways it's worse because to get the integral to grow, you need these massive deals. We also have small deals, but de facto we are on the biggest, most important parts of the U.S. government. Our software is. So there's really a twofold answer to your question. One, what will happen this year? Is a deceleration an actual one over a long time series? The answer is clearly no. But then the question is, if the baseline is 30, how does it get to where we want it, which was like the beginning of last year and not at the end of last year? And the way that happens is the deals we're already positioned to win actually close. And so then you get into the granularity of what will happen.
You see, again, so he's it's very important to listen to this because he's saying that they are positioned to get deals and they just need to close them, and then it will be like it was in Q1, which was a 70% increase in government revenue. So that's pretty effing good.
Happen in the U.S. government. Who gets the deals if there's no new budget? There's a lot of granularity there, which we should probably do a better job of sharing. But the short answer is, it's like whose chair gets pulled first. The people who are trying to enter the market first, last. So the new startups, totally screwed, because the people who are not sitting on crucial programs, partially screwed. The people that have software that is, or products that are useful in the past but have the right connections probably do. What's another version of this is if you just look at that chart I showed you.
He's explaining their modes here. I'm reading their 10K filings, and there they explain this more. Maybe it's a topic for another video, but he's saying that it's a very hard barrier of entry into this government sector, and that's pretty good. I also buy this from him.
With the Kager on Foundry. These are the most important programs for a dangerous world. Now, can't go into all the details, but we used to debate with people, especially my academic friends, if the world was dangerous. The danger of the world being clear and present to the U.S. government is very protective. It doesn't guarantee that, when this integral actually, how it behaves, but it makes it much more likely that it will happen in year and positively affect our revenue, which is another reason why I suspect that we will do well.
Cool. We go to the next clip. And this is a very, very timely question because there's so many investors that are worried about the dilution of shares because they're paying people with stock-based compensation. And it's once like his answer is very, very reassuring. And I also want to I feel that there's a common misunderstanding because the stock-based compensation was already decided when they did the direct public offering. And basically now the options are just being exercised. So it's not that they're diluting the share. He even goes into it that they're not giving out more shares. They did maybe $9 million of new shares. So there is no more dilution going on than the one that has been decided a year and a half ago when they came public, and now they're just exercising on this. So it's very important to understand that there hasn't been dilution, but there has been execution on a plan to dilute that was years ago.
Question. I really appreciate the opportunity. First and foremost, congratulations on all the hard work. It seems like you guys have a great team and are executing really well. From a retail investor perspective, the most negative sentiment I hear regarding Palantir is in regards to the dilution of shares outstanding over the past 12 to 18 months, and primarily in relation to stock-based compensation that's occurred. Other than the remaining shares to be vested that have already been announced, can we expect further dilution and share offerings going forward, or is it kind of reasonable to assume that the majority of this was from the IPO process and sort of a one-time event for the company? Once again, thanks and congratulations on all the hard work.
Very good question. This is basically the biggest or one of the biggest bear case points. So very important that we get this right if we want to invest in Palantir.
Hard work and business developments.
Thank you, and I really appreciate you, investors. Thanks for investing and the faith you have in us. Okay, so there's like the simple version, which I think it's like so there's stock-based comp and there's dilution. The dilution thing, that's a red herring. We're not issuing a lot of new shares. I think it's like in the $9 million range, and so it would be a little coy of me to say that's like no issue, move on. The thing to understand about Palantir, and then I want to just hit this, is like it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And
DPO is direct public offering because they didn't do a traditional IPO.
So most companies are, quite frankly, built so that when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, now we're thinking about how do we expose the data in a way that, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking, what's not tracking. But the primary source of a lot of these questions really comes down to, look, we built the company to support the U.S. warfighter primarily, and then dual use it for the glory of humanity, particularly humanity in the West. That was our idea. And because our primary client was not what someone at a hedge fund would think, we didn't actually think of these things from inception. And so now there's a process of normalization. You're going to see that in going forward on these calls. It's like, how do you normalize? How do you provide data that people can look at? How do you provide data that people can understand, that they're used to seeing, while simultaneously staying true to what our mission is? It's like our primary clients are the people we're serving. We're in full line with them, and that's why we survive even with a nascent sales force, you can get things to double, which is insane. So then you get to stock-based comp, which is like, okay, so and there's two parts of it. Of course, IRI people kind of don't want me to do any kind of forward-looking math, but if you're smart enough to invest in Palantir, you're smart enough to figure out there's essentially there's the how are we comping people, and there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times.
Okay, he gave the best possible answer a CEO could give. One of them is that we're basically only focused on the product, and we were so focused on the product that we didn't even know we were going to go on the stock market, and we didn't do anything in the company to make it look good for the stock market. And then, I mean, the reason why this is the best answer that he could give is because, when you're investing into something and you want to have an upside, you want to invest before the thing is obvious, right? And us smart investors who are, are looking at this, we can understand the data. But yes, as when an analyst looks at it, all he sees is like, oh my God, stock-based compensation, too high, not good. And this gives us an opportunity. And I actually love how he's thinking, how he's even mentioning that they have very low debt, very strong balance sheet. They're focused only on the customers, and they're surviving without salespeople. I mean, how many companies do you know that have no salespeople? I don't know many. And they have 1.5 billion in revenue and have 25 certified salespeople. It's crazy.
And the other on sort of investments into 2022 on the product side of the equation, Alex, maybe I hope you could help us sort of better understand the product roadmap on a go-forward basis, how you guys are thinking about it from a high level. From our perspective, you guys did a really nice job of better modularizing the platform and made it more adoptable by commercial enterprises, and I think it looks like we've seen that traction in terms of customer adoption. What's kind of the on a go-forward basis? Is there more activity of that ilk, if you will? Do you create more pre-built solutions, if you will, more directly target some of the sort of opportunities that you've been used for, but productize it, if you will? Is that a potential product direction? And then on the other side of the equation, in terms of investments, investing for growth into 2022, I was hoping you could give us a little bit of visibility into the nature of those investments. Is it just sales headcount? Is it the forward deployed engineers? How should we think about where those dollars are being deployed? Thank you very much.
Thank you for your question. And so actually, from my perspective, they're very much linked. Our primary investment in growth is investment in product, and we're doing a number of things in product. The things we've talked about at a general level is kind of making our product more modular. There's a slightly more macro riff here, which is that we were adversarial with IT structurally until recently. We were adversarial because, from our perspective, there's a learning process where they had to build these things. Now there's a myriad of companies. They're all, honestly, technically hard to indistinguishable, doing data lakes and all sorts of things that help IT people build something that is working for them to do certain things. And we were adversarial because they were like, okay, this Foundry thing, yeah, great, but we've already built these things. You would replace this. It honestly could also make us look bad. No one wants it. Also, the average sale price for Palantir Foundry across our business, I think last year was like $6.5 million. Most IT people prefer a small bite and consumption. You can argue whether that's the right model, but instead of fighting them, it's probably better to figure out a way to get our product more in their hands. So that's kind of the known part. What we've been working on recently, which is less known, is what we're really working on is we believe...
it's very important. I was also reading their 10K form, and basically the reason why this is such a hot topic is that, yes, as you heard, an average company pays them 6.5 million per year for Foundry. And obviously this is not a mass market product. This is a product for a Fortune 500 company and governments, and your TAM becomes very small. And but this is also something that when you read their filings, their main point is that they are not. That there's a lot of software companies like I give you an example like Monday.com, Zapier, ManyChat, like all these that handle small problems that every company has, but they don't handle the whole picture. And when you're a bigger company, then you basically want to invest into hiring IT guys and hiring talent that you write your own software for your company. And this is where they come in, because it's money for your company, it's time for your company, and there's no guarantee that the software that these guys are going to come up with, it's good for your company. So instead, they come in and they say, look, you don't have to hire 10 IT guys for, I don't know, 150,000 a year, and they might come up with a bad product, and it takes you half a year to implement it. You pay this money, and we take over the risk if it's going to work for you or not, and then you can implement it from 3 days. But naturally, the IT guys, like, they had a bad relationship because, like, it makes the IT guys look bad, or, like, makes them not needed, or I don't know. And this is what he's saying. And funny enough, this is their this is like a very strong point for this company, that they are, for the big companies and big governments, they are this one-stop shop solution, and it's not that they're trying to solve small common problems and not handling the small picture. And then all the investors are somehow worried about, like, when are you going to modularize your product so you can sell small parts to all the companies? And that's exactly what they're not, but I mean, they're still working on this. So I understand where the investors are coming from, but I also understand that how Palantir was built, and they are not this type of company. So sure, can they go smaller so that it's not 6.5 million for their software? This is what I believe he's going to say, but don't expect them to be like I don't know, $100 a month service. That, yeah, it's just not how they were built and not what they're for.
That people are paying a lot now for consumption and compute. No critique. But in reality, that's very much like paying for gas and oil exploration. But what people are really going to want is the ability to use the fully digested product. It's like when you drive your car, that's minerals and oil products and all sorts of chemicals built into your car, finished product. So, and we're going to build both modules that are reflective of Foundry, but also new ones in areas that we understand and, quite frankly, we know will be built in the near future, so that things we know are working, things that we suspect will work in the future, so that the nodes not only work separately but can work together. So de facto, we believe the compute of tomorrow won't be just compute. It will be productized compute. And that's what we're actually working on in rebuilding Foundry. So now, there's still, that doesn't mean like the Foundry as an aggregate, we can do the whole thing tomorrow thing. Massively valuable. And we're working on very, very large deals where companies are like, look, we want to transform what we're doing, or take what we're doing and export it to every company in our industry tomorrow. De facto, that's a Foundry use case, and I don't think there's anything else that does that. Because you can take, for example, there's a very large company in the healthcare space, and it's like they have a very interesting way of doing healthcare. They can't sell it to other people without that essentially being a software offering. Building that would be 3 years, or it could be 2 weeks. So that we're very much committed to continuing doing, because there's like, we're an N of 1 there. But where we want to be is an N of 1 on not just making it small. We like that because then we see the IT departments now saying, okay, well, we have all these things, and now we want to migrate here, and then selling them something.
Okay, this is very technical, but you get the point that they are going to make the barrier of entry less so that they can increase their TAM. And I just want to show one last thing.
Again, thank you for taking my question, and thank you for allowing a retail investor like myself to have a seat at the table. It's much appreciated. Doesn't go unnoticed.
Myself as a retail investor.
I love what
and I have all my assets in Palantir. So I'm very happy to meet another retail investor.
Yeah, that's all I want. In closing, he has all his assets in Palantir. This was a fantastic earnings call. I basically got all my questions answered. I don't know what scared Cathie Wood. I believe that she has other things that she was more bullish about than Palantir. I don't believe that there's anything wrong with Palantir. And if you like this, please make sure you hit the subscribe and like button, and I will see you in the next video. Bye bye.